Hello and welcome to the look ahead for Thursday, the 18th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we're expecting some labour market data from Australia. Tomorrow, during the European session, we're expecting things to be relatively quiet. And then in the US session, we've got US jobless claims and several Fed speakers hitting the airwaves. After the close tomorrow, the focus will be on Netflix Q1 earnings. Now, Netflix is expected to post EPS of $4.16. That's up from $2.88 for the same period last year. And that's going to be on revenue of $8.54 billion US dollars. Up from $8.16 billion the same period the previous year. So these are some encouraging numbers that we're expecting. Now, the results and the earnings come as Netflix share price up around 30% year to date. So it's outperforming the S&P, which is up around 9%. And if we just scale that back a little bit further, then over the Netflix share price up around 72% across the past 6 months, which is outperforming the S&P, which is up around 18%. So, we're seeing a very strong performance in the share price. And that's basically come as sort of, efforts to grow the ad-supported tier appear to be working, as does the crackdown on password sharing. There's also optimism surrounding sort of, the upcoming content, but we must keep in mind that competition in the area, in the sector, is still relatively hot. So, I think very much the focus is going to be on guidance for the coming quarter and also guidance for the full year, just so to get a sense of whether we're going to continue to see these uplifts. Now, obviously, subscriber numbers were extremely strong in the previous period. They could be a little less strong this time, but as I said, we're still seeing that strong rise in the share price. Now, buyers, if we get an upbeat number here, buyers are going to be looking to break above the 635 level. If we can just see there on the chart, that's the upper band. We can see it's been trading in this sort of holding pattern over the past couple of weeks, probably since around mid-March. Capped on the upside by that 635, capped on limited on the downside by around that sort of 606 level, which is the March low. So, as I said, stronger than expected results. We could look for a break above that 635 level. That's going to open the door to the $700 the share level, which was Netflix all-time high seen back in the pandemic. If we get disappointing or a sense of disappointment, particularly regarding guidance, then we could see a break below that 606 level. That's what sellers are going to be looking out for, and that's going to bring in that 580 level below that. So just what else we'll be watching tomorrow? As I said, we've also got Australian job data. Now, we're expecting to see unemployment tick higher to 3.9%, up from 3.7%. Job creation is also expected to slow considerably to 7.2 thousand. That's after 116,000 jobs were created in the previous month. Now, the data comes as we're sort of starting to see signs of the Australian economy slow, but the RBA are keeping interest rates on hold. And so, really that they're looking to keep interest rates on hold until they have further evidence of inflation slowing. Inflation data for the region is due out next week. So, but if we do see some more weakening in the jobs market, then that could help pave the way for at least rising expectations that the RBA could start to cut interest rates out in September. Now, just having a look at the chart here, we can see the Aussie dollar is actually trading at its lowest level against the US dollar in around 5 months. That's a very much a US dollar strength story that we've seen playing out across the board. Now, what if we get some weaker than expected Aussie jobs data, then we could expect sellers to look to take out the April low, which is that 0.6390 level. Below there, 0.63 0.360 could come into focus ahead of the 2023 low, which is at 0.63. On the upside, any recovery is going to need to retake the 0.6450 level. That's the February low in order to continue to grind higher. Just having a quick look here as well at the euro US dollar, just with relations to what's going on in the dollar. Again, I think a lot of what we've seen is a US dollar strength story. We've seen treasury yields tick up much higher to 5-month highs. They pushed past 4.6%, and that's the 10-year yield, and that's basically on the back of the stronger data that we've seen from the US economy, and also this sticky inflation rose for a third straight month in March. We also had Federal Reserve Chair Powell last night saying that basically raising questions over the Fed's ability to cut rates, saying the lack of progress towards cooling inflation to that 2% level does mean that there could be a delay in cutting interest rates. Now, that's obviously given the US dollar a boost. It's pulled down on several currencies. And for example, the euro US dollar, I think, is one of those currencies which has the potential to actually fall quite a lot lower, given that the ECB appears to be on track to start cutting interest rates in June. So, I mean, just the divergence there in interest rate cut expectations has heaped a huge amount of pressure on this pair and could continue to do so. So, I think that's going to be something to watch out for. Christine Lagarde is supposed to speak a bit later today, and the market's just going to be looking for clues as well, to see whether she is still looking and signaling towards that June rate cut, even though the Fed is potentially not going to cut rates until much later in the year, even September. Pressure could remain on the euro US dollar. Levels to watch as far as euro US dollar is concerned: 106, that's the low that we've seen this year. It's where it's trading just above at the moment. So sellers are going to look to take out the 106 level in order to test the 105.30, which is the March 2023 low. Got a break below that, then we'll be looking towards that 104.50 level, which is that 2023 low that we can see on screen there. On the upside, if we do find that 106 does manage to hold, then we'll be looking for a move above the 106.50, which is this week's high, and above that, then 107, which is the February low. I hope you've liked what you've seen. If you do, please do give this video a like. And if you would like to receive more videos like this, then please do press the subscribe button.